Welcome back to our channel, where we bring you the latest insights from the world of finance. In today's video, we will delve into how the US presidential election results can significantly impact the Indian stock market. If you're an investor or simply interested in market dynamics, stay tuned to understand why these political changes matter more than you think. First, let's set the stage by understanding the global connection. The United States is one of the largest economies in the world and a major trading partner for India. Any significant political change in the US impacts global investor sentiment, currency markets, and trade policies. For instance, during the previous US elections, we saw a high degree of volatility in the Indian markets as investors reassessed their risk exposure based on potential changes in US economic policies. The immediate reaction in the stock market is driven by uncertainty. Historically, when election results are announced, we observe heightened volatility in US indices such as the Dow Jones and Nasdaq. This volatility often spills over into the Indian markets. Why does this happen? It's because foreign institutional investors, or FIIs, hold a significant stake in Indian equities. When US markets show signs of instability, FIIs tend to pull out funds from emerging markets like India, leading to a drop in indices like Nifty and Sensex. The election outcome can also bring significant policy changes. For example, a change in administration might lead to different trade policies, interest rate adjustments by the Federal Reserve, and shifts in fiscal policies. A more protectionist US trade policy could hurt Indian exporters, particularly in sectors like IT services and pharmaceuticals. Conversely, a pro-trade administration may boost investor confidence, encouraging more capital inflow into the Indian market. Let's look at some historical trends. In 2008, during the global financial crisis and the US election, the Indian markets experienced a severe downturn. Similarly, in 2016, when Donald Trump was elected, there was initial uncertainty, but the markets quickly rebounded due to pro-business policies. In 2020, the election results coincided with the pandemic, leading to unprecedented market reactions. Indian markets initially dipped, but then saw a strong recovery as the US announced stimulus measures, boosting global liquidity. Now, let's focus on the 2024 election. The ongoing election in the US has already created ripples across global markets. As of now, the Indian stock market is showing signs of caution. With Nifty facing resistance around key levels, investors should watch out for announcements on US fiscal policies, interest rates, and trade relations with India. These factors could dictate the direction of the Indian markets in the short term. To sum it up, the US election results play a pivotal role in shaping global investor sentiment. For Indian investors, it's crucial to monitor the immediate reactions in the US markets, changes in FII behavior, and any policy shifts that might impact trade and capital flows. Stay informed, diversify your investments, and be prepared for short-term volatility. Remember, while elections create uncertainty, they also bring new opportunities.